The Rasa Drivers app in a download. Rasa Ride Sharing Company ARASA.ca என்ற இணையதளத்துக்கு சென்று The Rasa Drivers app-னை டவுன்லோட் செய்து டிரைவர்ஸாக வேலை வாய்ப்பை பெறுங்கள். மாதாந்தம் $4000 வரை சம்பாதியுங்கள். வணிக நிறுவனங்கள் Rasa இணையதளத்தின் மூலம் மளிகை பொருட்கள் மற்றும் உணவுப் பொருட்களை விற்பதோடு வாடிக்கையாளர்களுக்கு டெலிவரி செய்யலாம். தமிழில் தகவல்களை அறியாளையுங்கள். GTA பற்றி 40 ஆண்டுகள் அறிந்து கொண்டவரும் வீடு விற்பனை துறை ஊடாக மக்களால் அறியப்பட்டவருமான சிவா பிள்ளை 416-854-0005. Taxi broker licensed by City of Toronto.
Recording in progress.
Good morning, team. We are meeting again February 12th, Saturday morning. The reason I'm telling the date, you already passed 7 weeks, 6 weeks plus from this year. Every year, our real estate industry, when we start from zero. Then every week we had to think about it. What's the plan? What we are doing it. You guys all know. I repeat the same question every single week. The reason I repeat the same question every week. Give some time for everybody to come and join.
You try to mute everyone here. All right, go ahead, Uncle.
Okay, the reason I start the same question every week, give time for everybody to come and join. 10 minutes grace time for everybody to come and join before we start the topic. Plus, we are here. Why we started real estate? We are here to make millions. Then we had to tell ourselves. I'm asking you because we are in a meeting. Every single one of you had to ask yourself, am I doing the right thing in my life? How much money is my target? What I am doing it. From last week, I was thinking to do what I had to do for the real estate industry. What I did for the 7 days. Only 7 days just passed by. Or 7 days. We did some productions. Okay. Today, I want to tell you guys. I always talk about the age group, pre-construction, condos, the different kind of approaches, and the prospecting. I always remind you guys this one. Today, I want to share you guys two good information for the making money. We are here to make money. How are we going to make money? I met two different interesting clients this week. I want to share with you guys. One I met yesterday evening, and other one during the week. Both are real estate agents from the different companies. One of the salesperson came to me to know how he can manage his tax returns, because he started real estate only 4 years ago, and he bought the properties and renovated and flipped the properties. He did flip the properties, 4 properties he flipped the properties. One he flipped the properties, he made money around $1 million. His income is around $1 million profit $1 million profit for the flipping the properties. Then he said, when we started, he was not doing, he didn't get much clients to sell the houses, and he was doing it only 3 or 4 deals a year. When he was doing 3 or 4 deals a year, he was thinking, how can we make money? Then even though market is high, he did the risk, and he bought the properties. Excuse me, guys, give me 30 seconds. Is there any issues? It's okay now? Excuse me, can you close the door for me? Then what he said, he was doing only 3 or 4 deals a year for last less than 5 years in real estate. Then he bought the property for himself, and one by one, and he arranged the contractors, and he closed the transaction. He bought it and he renovated and he sold it. He said he did four successful closing last year with his own money, and his profit is little over 1,200,000. He made money. Okay, for example, guys, we are in the real estate industry too. I know the market is risk is involved. We started real estate with our labor, with our service to make money, not with our own capital to make money. But at the same time, he did that one, and he said he made profit. I saw the profit over 1.2 million, and he did the agent commission is different. Agent commission is entirely different for the property he bought it and the property he sold it. That commission is different. That's one of the thing. Even though the reason I'm telling you now, we know that one we are looking for the market when the market come down, because the government is taking delays. But we all know there's a changes going to be there. I was expected the changes definitely changes going to be there before 15th of February. But the federal government, liberal government is delaying for no reason. And when they come to power, they already said they're going, before they come to power, they said they're going to do the changes. And when they come to power, they are very quiet right now, but it's going to be there. In that case, every single real estate agent, please be ready yourself. At least buy 1 or 2 properties when the market comes down, and save money right now and plan it yourself. In that case, you can do the flipping property side. Maybe I can tell you guys the flipping property, the taxation part and everything. I can help you guys in that different separate meeting for the handling the flipping properties for the income tax, how to buy under the personal name or corporate name, or those kind of things. We can think about it, but get ready yourself. Get ready yourself. This particular agent flipped the property and made money, and I saw it to the table. Other guy, he borrowed the money. He borrowed the money from his existing house, around 600,000. Like other big corporation, like our big corporation, he borrowed the money from a different big corporation for the high interest rate. And what he did, he was giving the mortgages out to 10% down payment clients. He even advertised he can close a transaction with the 10%. And he did around 9 deals last year. Out of the nine transactions, 6 transactions he did. He helped the people for the 10% down payment. That was interesting actually. But he doesn't have money, only the home line equity. He borrowed the equity, and he was arranging the lawyers, giving the 10%, and creative financing. The creative financing works. He closed a transaction and got back the money. Plus, he made money from mortgage lending business slowly. Then he came to me and asking me the mortgage lending side, as well as our interest rate. How can we borrow the money for the lower interest? And we want to do a little bit more for next year, targeting 20 deals next year with the 10% down payment clients. The reason I'm telling you for those two clients, because we are here to make money in the real estate industry. But at the same time, these 2 clients, not really sales. Not the sales techniques was different. They did, and they made money. Guys, every one of us, we had to think about it. What suit for us, and how much risk we can take in our business, and how can we handle it and make some extra money. Anyway, get ready when the market changes comes. Immediately we all have to jump in and invest more. All right. Again, the same thing I need to repeat. Prospecting. Look at your pillars. which pillar is good for you to prospect. Work on the pillars. This is the month. When the summer months come, when February month is very important month. February and March, you have to do your marketing. Then only the April and May, the springtime, you can get more and more listing. Go to your comfortable way. Go to your comfortable way and make a plan and implement the plan. You have to go out and do the work. We are sitting home, you're not going to get it. Okay, all right. Any question anybody have right now? Then I could start. I want to share with you guys one of the clause before I start my probate fees and today's targeting training. And one of the interesting question one agent asked me. He wanted to go for multiple offer. He wanted to go for multiple offer and he failed already 4 offers, 5 offers. He failed for since January 1st, and he got only 1 out of 6. Then he asked me, can I use the escalation clause? Again, he asked me, can I use the escalation clause? The escalation clause means, I know the escalation clause long time ago, but the escalation clause, I just want to inform you guys, but it's not a good idea to use the escalation clause. The escalation clause means, I'm going to read the paragraph, whatever is there. The clause is designed, the escalation clause is designed to different competing offers by automatically increasing the buyer's purchase price by the preset amount. That means, for example, we are making an offer. When you make an offer, you are making the offer for the property listed 1.499, and you are making the offer for 1.6, for example. That you are putting the escalation clause saying that your clause, you are bidding $10,000 or $5,000 more than the highest offer. You are putting the clause, you are putting the price in your offer, you are putting the price for 1.6 million. But at the same time, what you're doing it, you are putting the clause in the Schedule A, saying that whatever the offers come, the highest bid offer, for example, the highest bid offer may be 1.825. Okay. If any highest bid offer comes, you're going to you are saying that you are offer $10,000 more than the highest bid. That's mean the clients really need the house. That's clause called escalation clause. Then I know this clause already. After he sent me the message, I was reading the RICO side, what are the issues and everything there. Then I got the information from RICO, but I know this clause already, guys, from last 5 years or more, but we don't use it for the regular offer presentation. And the RICO saying, yes, you can. RICO doesn't endorse that the escalation clause, and there has no authority to prohibit their use. RICO saying they are not prohibited. That means we can use it. But at the same time, escalation clauses can create a very complex situation for the buyers, sellers, and sales representatives for the legal issues. For example, if you are putting the escalation clause, I want you to know today what is escalation clause. That's escalation clause. We are putting it $10,000 more than the highest offer. Second thing, escalation clause, you can't put a cap on it. For example, property listed 1.499, your client is giving 1.6, and he putting the escalation clause for $10,000 more than the highest bid. But at the same time, you are saying my highest limit is 2 million or 1.9 million. In that case, any offers come more than 1.9 million, escalation clause doesn't work, because your cap is there. You're saying I don't want anything if the highest bid come more than 1.9 million. And here we have some of the issues. You go ahead, you go to the RICO website today and type in escalation clause and read it. Or else if you want, I can send the link to read. But they are not the escalation clause, the RICO not saying that's prohibited by REBA 2002. It's not prohibited, but they're saying only it's going to be a problem. The disclosure issue. If you are the seller, you are the listing agent, what you have to do, you have to disclose to other people, so you have the escalation clause. That's the interesting part. For example, if you are listing the property, one agent sending you the escalation clause is there, and $10,000 more than the highest bid. In this case, how are you going to disclose the price now? You can't disclose the price by law right now. There are some issues there, but anyway, I only inform you guys for the escalation clause issues. All right. Now we are going to go through our. If you have a question, you come out and ask me, or put it in the chat box. We can talk.
Silvana, just one question. So about the escalation clause, let's say there are two offers which has escalation clause. So technically, we can just play the game of maximum. So who gets the capped person doesn't get it, or how does that work?
Honestly, I cannot answer this question to you. It's a very interesting question, very good question. But I don't have an answer. I'm not a lawyer. Maybe I can check it out with some lawyers and tell you for both escalation clause. But at the same time, we cannot forget real estate transaction still is a private transaction. Seller is having the authority. There's no regulations. There are no regulations controlling this. No regulation is controlling the seller. The very good the question you asked me. But there is no regulation is controlling the seller. If what happening today's market, even though you are giving over price, seller doesn't want to take the price. Even this week, I answer your question. I can ask the lawyers, but the answer is going to be disclose both person until we can't disclose the price. That's a problem we have right now.
Yeah, well, we can cap it out, right? We can cap it to, let's say, 1.9 million, as you mentioned, right? That's
right. Yeah, but the seller have the rights to reject both offers and go for the other one. But this week alone, I get our agents complain. Not this week. Sorry, since January, I can say. Since January, I got 3 or 4 incidents. The agents gave the price, and the seller rejected. One of the incidents is very interesting. We sent the email to I told the agent to send the email to the other salesperson. Other salesperson sent back the email saying that this particular property is an estate property. Estate property look like you haven't even read the property. You haven't even read the listing properly. You are putting the fridge, stove, washer, dryer, and you are asking for the warranty for the house. So many other things you are asking. That's been you don't even read the listing properly, and you are putting all the clauses, whatever you not supposed to put it in for the estate property clauses. Plus, you are asking for the appliance and everything working condition for the end of the closing time. That's mean you are not even working for your own clients. How can you work for my seller? In that case, seller feel like you are not going to close the transaction. Seller rejected your offer even though you give $60,000 more. Guys, I'm not making up the stories. This is the real email. I have it. I can share with you, but there's a personal side for the one of the agent. This one of the side. Even yesterday or day before yesterday, agent called me. He gave $40,000 more, and he didn't get it. He didn't get the property. I asked him about the inspection. He said there's no inspection. It's possible because the seller does. But the only thing I asked him, did you go with the bank draft? He said no bank draft. Of course, if there's no bank draft, if I am the listing agent or if somebody I'm guiding our listing agent, if somebody come with no bank draft, we are not going to close the transaction, even though price competing offer is more than $20,000 more or $30,000 more, because the seller is selling the property $300,000-400,000 more than whatever his expectation right now because of the market condition. In this case, seller, your question, because sir, the seller might feel like they are gambling it. They're not going to close the transaction. They don't get appraisal report. Appraisal amount. So if they don't have the money to close the transaction, why should I give it to these people that can go with somebody who are come with really firm and clean offers? It can be many reasons, but I don't answer your question. Sorry.
Right, that's okay. Then another thing happened to me last week. We were putting an offer. They wanted their bank statements. They wanted their mortgage approval. They wanted their equity statement. They wanted everything just to make sure that they even consider that offer to be a valid offer so they can close the property. And my client was taking out money from their existing property. like refinance their mortgage. So they had the paperwork, but they were kind of, why do we have to put why do we have to give that? They were willing to put more than 7 to 10% like as a deposit, but they were not ready to provide us with the paperwork. So that deal didn't go anywhere because they did not provide the paperwork.
I understand, sir, but at the same time, I can't blame the listing agent these days. What's happening? Buying side. I know you educate your clients and you go with a serious client, but not that you can't expect everybody doing the same thing. The time of the transaction, everybody looking for the creative financing now. They don't have money because the money is supposed to come from different places or different resources, and the time of the closing the transaction, they don't have the money. Even some agents, listing agents, asking them if the appraisal value comes 200,000 lower, how are you going to close the transaction? I feel like that's a valid question and interest and educated question the listing agents are asking. They had to ask this question because in case doesn't close the transaction this week, I'm talking about this week, one of the agent, 2 deals after they finish the deal, they didn't give the deposit actually, and the buyer is bargaining for the next day. I need to reduce the price. Then only I can buy this one. And he asking when I can do the inspection. It's a firm offer. But there are some, but not all the agents are educating the buyers, and the buyers asking some the question like this. We can say they are innocent questions, but this is happening right now. In that case, the listing agent, if they going the prices going 300,000, 400,000, 500,000 over asking, if he has to ask those the kind of question, I feel like these are reasonable. Educated real estate agents are asking these kind of questions. What we can do? That's one of the market situation right now.
Thank you. Yeah, that's
okay. It's very good questions today. Then I'm going to start up with the probate clause, as well as the probate. What is probate? And after that one, the Canada pension plan or Canada pension plan. Canada pension plan, Canada old age security clawback. What is the highest income and the lowest income for the payback amount for the old age security and the old age security supplement. We're going to talk about that. One reason I'm talking, the clients calling and asking those questions, it's a knowledge building side. You guys need that one too. If somebody asks, you have to give the answers. Okay, now I'm going to talk about the probate fees and probate clauses. Okay, for example, estate property. Now, before that one, handling the estate properties. For example, if someone dies with a will or without will, the ownership definitely going to be transferred. Okay, basically saying, first we talk about the probate and will and probate. After that, when we talk about how to handle the estate properties, that's going to be more matching and more understanding. Okay. If someone come on the house, they are husband and wife, they having a joint tenancy. They are having a joint tenancy agreement. If the husband died or wife died, the property automatically go to the existing the surviving party. The Canadian law, the taxpayers need to pay the taxes. Either they are alive or they died. Nobody else going to pay their own taxes. For example, if the person is owing the tax, he has to pay for it, or else if he have any asset, they owing the money to CRA or any other else, the executor going to pay. We talk about what is that means. Okay, for example, first the house. The houses we can think only just the single family residence. Sorry, the primary resident house. Thanks God, until now there is no capital gain tax. That's mean the person after died, they don't need to pay for the capital gain taxes to the government for the primary resident. In this case, the husband or wife, existing partners, not necessarily husband and wife, even two friends, they are joint tenancy agreement. They bought the house, or father and the daughter bought the house. Joint tenancy agreement. Yeah, in that case, they don't need to pay for the capital gain tax. Surviving party automatically get the house. We don't have to do anything. We don't have to do any adjustment. If they want to keep it the house, they can certainly live. and they can sell it. They can sell it. The time of the transaction, the lawyer will do the transaction. The lawyer will do the disbursement side. But the thing is, most of the cases, what happened, if the husband and wife have a house with a mortgage, if one person died, they don't inform right away because the mortgage company wanted to qualify the excess for the mortgage for the surviving spouse, or else mortgage company might say start up the trust account, and if the property is rented or any partially rented or anything, there are some issues to come with it because of the property already signed for two people's income, and one person dies, other person cannot be able to carry. There are some situations. That's the reason lawyers always say just there's no need anything else, because the existing partner is taking the full responsibility and getting the full ownership from the partnership rights, joint tenancy partnership rights and the matrimonial rights, not matrimonial rights, partnership rights. In this case, they ask if you are selling it, there's no problem. But at the same time, if somebody have a joint tenants in common, if you have tenants in common, the house they are leaving the house. Just we start with only just one house, okay? Then we'll go to the further. On one house, the father, mother, and some other daughter or anybody else, they have a house, and they are not keeping the equal percentage. One person having only 2%. Other people's having 14, 49, 49. Okay, in this case, the house is coming under the tenants in common house. Even if one person dies, what will happen? We had to appoint the trustee, and we had to go to the probate, and we had to see who is the one taking the ownership for the beneficiary side. Who is the one beneficiary for that particular person who dies? And we had to go through. We had to apply for the. We have to apply to Supreme Court of Canada and pay for the probate fees, and we had to go through this one. Recently happened one of the transaction. The father and daughter. Father dies. Only father was keeping only 2% of the ownership in the 2016, and the only 2%. The daughter didn't bother apply for the. He doesn't own anything else. Then he didn't apply for the permit to sell, the probate side. In this case, what happened, the time they're selling the transaction, we couldn't able to close the transaction. Then finally, there are we find some loophole to say that when the property is less than $50,000 value, the valuation of the property and appraisal and everything. Finally, we try so hard to close it out. But basically saying, if somebody dies, they had to pay their own credit, own taxes. And this is called estate tax planning. They can even plan it in advance, estate tax. But we had to apply, we had to find the person who is the one. For example, one person have two properties, and one property, father and mother, they are keeping it. Other property is a rental property. Then what they had to do, if the person who owned the property have a will, the will is going to tell them who is the one he is going to give that particular property. Even though according to the will going to give the property to the particular beneficiary person, he can't get the property itself right away because they had to pay for the taxes. For example, the father and mother have the property, and they have only one daughter, and he's saying one rental property. He bought the rental property for 500,000 one of the days, and today the property worth for 1.5 million. Okay, he's saying the will, after me, this particular property going to my daughter. My daughter going to get this particular property, but how she's going to get the property? He has to go through the Supreme Court of Canada. They apply. We have to nominate the based on the will. Just easily can go for she can be the executor for that particular transaction. And when you go as an executor for the transaction, she is going to be executor for everything for that his other asset or anything else. He's going to decide. She's not going to take a decision, but he's an executor. Only one person can be executor, even though the father and mother have 5 kids. The courts want only one person. They had to nominate just one person as an executor. That particular person is going to handling all the paperwork with the courts. After that one, they're going to chair it the way how they're going to do it. Okay. Then what happened for the rental property side? We had to go to the courts, and the courts has to calculate how much is the fees How much is the probate fees to transfer the property from one owner to other owner? That's the way the government charging. The probate fees is there. For example, in this example, I pick only the father and mother, and father dies, and the daughter going to get only just one house, one single house for the rental property. Bought it for 500,000. Bought it for 500,000 and selling it for 1.5 million. I mean, putting the easy calculation, guys. 1.5 million. In this case, the probate fees, government charge. Government of Ontario charge the fees $5 per $1,000 up to 50,000. It's not only for the houses, anything under the probate, even the money in the banks, stocks, the mutual funds, stock mutual fund, everything under the personal name, not the joint name. That's under the his only personal name, and going through the probate to go to the kids and wife, even his own mutual fund, stock market, RRSP. There are some rules, some regulations. They are husband and wife. If they are married, husband and wife, the spousal transfer. And going through the probate, there's a $5 per one. The first $5 per thousand, $5 per thousand up to 50,000, and $15 per thousand up to $15 per thousand, whatever over 50,000. There's no limit. There's a calculator is available in the Google. You can type in the Google estate administrator tax calculator. You can get the calculator, and I just put it in to tell you guys today. If we put it in $1 million, as I said, first 50,000 only $5. After that one, $15 is coming up to $14,250. That's mean transferring the property from the father to the daughter without taxes. The probate fees alone for $1 million. $1 million is $14,250. This is the probate fees. Do you have to pay this one? You have to pay to the government of Canada. There's a question coming up. Hi, Silvana. So sorry. Okay. Then what we have to do? Other capital gain part is there. The capital gain part, who has to pay for the capital gain? The person who dies. Then what he has to do? Okay, I'll go some of the more than one property. Yeah, if it is more than one property, based on the will, who is the one going to get the share? How much shares they're going to get? How many percentage who is going to get? That can be different side than the probate side. Okay, the probate side, one executor going to pay the profit to transfer it to the different peoples. If somebody doesn't have a will, still the same process. But at the same time, if doesn't have a will, who is the one going to the executor is the one they had to nominate themselves. With the will, it's much easier for the transaction, for the lawyers to apply to the Supreme Court of Canada, and transferring the property is much easier if they have a will. Allocation is easier. If they don't have the will, they had to wait for it certain period of time. The same time, maybe there is a father and mother, and I pick only one daughter. Say for father and mother and the three kids. They had to allocate the mother get the different portion without will. Also, mother get the different portion, even though for the not the joint ownership. If the joint tenancy, she give the surviving spouse get the full ownership. If there is not a joint tenancy property, spouse have some of the extra, and plus what they had to do, they had to file the taxes. They had to go through the that's called T3, estate tax. They had to file the estate tax for the surviving person. Sorry, the person who died. We had to file the tax, and we had to get the tax clearance certificate. We had to get the tax clearance certificate from the Revenue Canada to dispose the money. But we can sell the property. But the disposing the money, the accountant who is doing it, he has to apply for that clearance certificate, the CRA, and the clearance certificate he has to give it to the lawyers. After that, only the lawyers can transfer it. That's mean the person, even though he dies, for example, in this situation, he bought it for 500,000 and he's selling it for the property value today. He doesn't need to sell it. Maybe he transferred the daughter for the father to daughter is a capital gain is there. Only capital gain, only the transfer tax is going to be there. Land transfer tax is also going to be there from father to the daughter. We has to pay the government, and we had to appraise the property, and based on the appraisal value, we had to pay for the capital gain tax for the person who died. The accountant who's doing the T3 income tax for the estate tax, he has to pay to the government of Canada and get a clearance certificate. This is the ways go for the estate side. That's the reason some people, if they have more than 5 properties, they're going for the good estate planning to escape the probate tax, probate tax, $50,000 to $100,000. You can imagine if somebody want to transfer $10 million to the family members, the 150,000 probate fees alone, that they can skip the probate fees if they plan it in advance for the family trust or some different estate planning. And for example, as a realtor, when we are dealing the estate properties, we can see the estate of Mr. Smith Nixon, estate of. That's mean we have to understand the real estate agents. We have to understand ourselves. The person who owned the property, he dies. Who is the one selling it? The executor, can be the family member or different person who, based on the will, they are selling it. That's mean we have to understand one thing. This house, they cannot give you the warranty because they didn't live there. They can't give any sellers information sheet. They cannot give you SPIS. They cannot give you the reason. They don't know about the property, like a power sale property. Power sale, bank selling the property. Bank doesn't own the bank, only have the power to sell the property, but they don't. The bank doesn't know no idea basement leak or under the roof leakage or anything, condition of the properties or any issue. So, for example, sewer backup is a good example. Sewer backup we don't know today. Maybe 5 years ago, sewer backup. Power sale property, bank doesn't know. Same thing, the estate properties. The person who is living there is in a different country. They want to come and sell the parents' property. They cannot give you any warranty or escape for that particular information for the property. You have to buy it as it is. In that case, when you prepare the offer, the important clause saying that one, they have the permission from Supreme Court of Canada to sell the property. We call that old name is called estoppel clause. Estoppel clause, the estoppel certificate. That's the old name for the estoppel certificate. We had to have that one. Then only they can close the transaction. When the lawyers closing the transaction, again repeating, guys. Then the lawyers closing the transaction. When they're transferring the deed, they had to key in the number from the Supreme Court of Canada. They had to key in the number for the estoppel certificate number. Then only they can transfer the deed. Anything is over $50,000 value. In this case, when you are making the offer, we always put the clause saying that one, the seller, on behalf of the seller, the person who is the executor right now, he has to have the estoppel certificate. Sometimes what they do, they apply to the courts, but they don't get it in their hand, but they don't want to wait 3 months time. They want fast. Why should they keep the house for 3 months time? And I won't sell it right now. They may put the listing after they apply to the courts. They are confident they can get it. But at the same time, for example, after they applied, the person who dies, one of the lady or men coming in and they're saying they have some, they live there in the house, or there are so many things can happen. So many things can happen, and anybody can come and oppose. They can ask for the ownership of the particular house. We cannot control that one. In this case, we had to have a clause saying that one, and we had to educate our. If we are dealing with for example, if we are getting the listing for the estate listing, when you get the offer, you have to have the escape clause. Again, you have to have the escape clause saying that one, in case. If you don't get the estoppel certificate, you can't close a transaction. In that case, rather than somebody come and suing, you have the escape clause. Any failures come for escape to getting the certificate. We need the extension until a certain period of time. We have to have that one. And if you are working with a buyer, you have to tell the buyer, if they are first time buyer, they want to move in the particular day, you have to tell them. Sometimes you can't able to close a transaction on the particular date because of this is a estate property. Second thing, there is no warranty going to be there, either appliances or the house or anything. Buying as it is, yes, you can do inspection. Nobody going to stop doing the inspection. If it is a multiple offer, you are getting it without inspection, taking the chance. That's up to you and the buyer side. But the government side, estate properties are estate properties. Estate properties is much better than the power sale properties. If power sale property, somebody lived there and they couldn't able to pay it and they damage the property and go sometimes, some cases. And the estate property, somebody lived there and died. Is most of the things sometimes some people ask for the estate properties, if the person died in the same property, that's you have to verify that one. Now nobody, that's not going to be the certificate because the people, most of the time, we have an experience. If you are an experienced agent, you already deal with the estate properties. You already, when you go there in the houses, you can see the old appliances and bigger TVs and 1970s TV and the carpet, old carpet, and see the old person lived there until 100 years and died. So something like that, you can feel it. Not always, but you can see that part. In that case, if somebody asks you the question, the person died in the house or the hospital, that's you don't know. The person not going to disclose. Then you have to ask the agent to disclose it. Listing agent doesn't need to disclose. Otherwise, if you don't ask, agent doesn't need to know. In that case, sometimes our office agents ask me. Office agents call and ask, how can we find out? The only way you can find out, guys. Only way you can find out, you can ask the listing agent for the listing agent, and as well as go to the neighbors. That's the only way you can find out. Go to the neighbors and ask the neighbors. The person dies here, the particular house, or if you go and stand, one or two times, you go there a few times, you stand there. All the neighbors, if you ask 5 neighbors, you get the full information. Some people like to talk.
Is that a stigma to the property, Silvana? If somebody dies in there, is that a stigma to the property? Let's say if I don't care.
No, according to the courts, they treat the same. Whether the person died in the house or the hospital, you don't need to disclose that one.
If we don't know, and we don't have to tell other people when we are selling it, right?
That's right. If you know something and you are hiding it, that's an issue. If you don't know, you don't know.
Yeah. Okay. Thank you.
Even though maybe at the same time I can pass one message for you guys. Our office transaction is my own client. Own client came to buy for the, I told you about 15 years ago, all right? During the Christmas time, he wanted to buy the house. I gave it to one of the senior agent. He says Castlethorpe in Bellamy and Eglinton area, Castlethorpe area. Then the house was cheaper, and after we bought the house, they never disclosed anything. Then we find out before the closing date, the husband killed the wife and some other person was in the house. They killed double murder, and the lawyer tried to get the signature. The lawyer arranged the real estate agent and tried to get the signature and everything. The lawyer is a very high-end lawyers in the downtown lawyers, and they never disclosed anything. And before the closing the transaction, only we got to know. And we didn't close the transaction because that time my knowledge was different than right now. Then we went to our own lawyers. I told you about this was happening in 2005 or 6, I believe. Then 2003, 4. Then we went to the lawyer. Lawyer went to the courts and said that, you know what, I was there in the courts. You know what the judge asked? What are you expecting? If somebody died, he killed a wife, that's a different story. That's a judgment is going to be there for this punishment. But what are you expecting? You want to demolish the house and rebuild back and give it to you? No. This is the one. Why disclosure? Disclosure is nothing to do here. If you want disclosure, then inform. They asked me, okay, this was in the newspaper. How come you guys doesn't know? It was in the newspaper, but it's no need a disclosure for this particular case. That's your own due diligence. You have to do it. But anyway, if they go to the RICO, maybe RICO can tell you different ways. But I'm saying, if somebody died in the house, I'm not saying don't disclose it. If you know, you have to disclose it. Otherwise, you don't get in trouble. Silvana said that one. Okay, so that's a legal part. As long as whatever you know, you have to disclose. If you don't know, you are not a secret agent to go and do the investigations. That's what our side. Whatever you know, you have to disclose. If the seller is telling you, just you have to disclose. You can't hide it. Thanks, Gulshan, again, the question you asked. Okay. In this situation, for the estate properties, we had to expect the delays. Again, in that case, the buyer is moving, the closing date can be changed. And definitely the buyer buy You advise the buyer as a human being. I advise the buyer. He need to do the renovation. Definitely change the carpets. And I seen some properties very bad condition. Very bad condition. We can't even step inside. That kind of bad condition I seen for the some trust estate properties. Some properties they clean up everything and executor they clean up everything and they want to get a better price and sell it. It's a different situation, guys. But okay, legal issues. Establishment certificate is important as well as the closing date. It's not 100%. We can close the transaction this time. All right. And I'm going to go to the chat box before I go to the Canada pension, audit security, and the clawbacks and stuff. Okay, first I'm reading the question, guys.
Salvana, before you going other one, if that the murder or suicide we have to disclose, or is it a natural death? Still is mandatory to disclosure?
I don't say even murder or anything. We had to be. If you don't know, you don't disclose it. If natural death, if you know as an agent, if they ask you, you had to say just whatever you know. That's what RICO is saying. Full disclosure is a RICO. RICO side full disclosure. If somebody asks you, Prabha, you are a listing agent. If anybody died in this house, if you know somebody died in this house, just you have to say yes. But okay, for example, even different countries, even the Asian countries, everybody dying at house. Even some European countries, after they don't have a funeral hall, they are keeping the body in the house. But different culture, different mindset, different environment we are living in. Answer your question. If you know something, you have to discuss.
Hi, Anna. Good morning.
Yeah.
What I'm asking is, if I have a buyer, and then the buyer is so particular things about the stigma, this death and ghost and things.
Yeah.
And then if he asks me as a buyer agent, so I will ask seller agent. If he says no, but what are the action I have to take it to tell the buyer?
Rajita,
Because I may not know, and seller may be hiding, but he is so particular about the things that he is interested in that specific property. So
you can do a few things, Ranjita. If your clients are serious, you can put it in the writing for the offer. Ask the seller, not the agent. Ask the seller this question, and you can put it in the writing for the disclosure to disclose about the property situation. And there are limitations for the real estate salesperson. Real estate salesperson's job. We are working in the real estate industry. It's a community level. We are working the real estate industry based on the referrals. We are looking for the referrals, and we are doing it not only the introducing the property. There's different places we can see in India dealing with the different community agents. They only introducing the property and making the offer. After that one, they don't even care anything. They said, okay, you do your due diligence. You go to the people whoever you want to do it. Go ahead and do it. You are not an investigation officer, but the only thing you as a client side, if they ask you anything in advance, you can put it in writing for those ones and ask them the initial. Oh, you can write a separate schedule. They can make a schedule COD and ask the seller to initial it whatever you're asking and disclose it. The same thing like we put the marijuana growth. Marijuana growth, we are asking the seller for the disclosure. Same thing you can ask those one. And we can ask anything. Oh, yeah, we have to protect the buyer side, but the buyer also have a due diligence. He has to go. I always tell the buyers when I deal the transaction, go at least morning time and evening time and stand in front of the house and see who is the one, which community is working around that area. The market is changed for now. We had to get the house because of the 30 offers lining up. We are getting the house. The real estate market is upside down. Whatever the real estate strategy is not here anymore. But the way the people buy the property, they go to the inspection and see the property, get to know the property, and they stand there morning and night, and they familiarize the property and the neighbors and everything. I mean, at least the confidence of the property, what they're buying and they're moving in. They had to go and talk to the neighbors. Talk to the neighbors is one of the main. I can tell you, that will give you everything. Tell the buyers to go and stand there. A real estate agent, your job to introduce the property, and your due diligence, you can ask for it, and you have to disclose whatever you know. That's it.
Thank
Put
you.
it in the writing.
Thank you.
Put as a separate clause, or else the regular schedule. You put that clause and ask them to initially beside that one. In that case, at least you can do your job, right? You know.
Yeah.
Okay, there's a
Thanks,
question in
Anna.
the chat box. The chat box question. I'm going to read the chat box question before I go. My client bought a property in Oshawa. It was listed as a residential site in MLS, but one neighbor is a brokerage office, and the other neighbor, one second, there's a small screen, I'm reading it, bear with me for a time, please. All right, the question is here. My client bought a property in Oshawa. It was listed under the residential site in MLS, but the neighbor is a brokerage office. Neighbor, right? Okay, neighbor is a brokerage office, and the other neighbor is a haircut place. The neighbors, two neighbors are haircut place. My client's mortgage broker saying the property is falling under the commercial. No, it cannot fall under commercial. Okay, for example, the questions they're saying, the agent is sending me, my client bought a property in Oshawa. It was listed in the residential side in MLS, but the one side neighbors the brokerage office, and other side neighbors a haircut place. My client mortgage broker saying the property falling under the commercial. So my client is some issues with getting the mortgages. Can you give some advice? Okay, first, there are both neighbors are side by side is commercial. Doesn't mean this house is going to be a commercial property. Okay, you have to check it out. You have to check it out in the city. First thing, you have to go to the city and check it out. What kind of the zoning is there for the particular. Okay, answer. She asking the advice. Go to the city and give the property address and ask them what is the zoning for the particular property. Maybe both side neighbors applied and they allowed as a commercial. If it is a commercial, the property value is double the price anyway. That's another story. Mortgage is only one little part. If both side is a commercial, you are buying for the residential price for this property, then can go double the property value. Okay, the next, my answer this one, you have to go to the city. You have to go to the city and ask for the city for the zoning side. That's the only way you can do it. Neighbors property commercial doesn't mean this is a commercial property. This is my answer. Go to the city and verify the city. Another question, hi Silvana, is just wanted to clarify the transferring investment property to the child at a lower price. Okay, wait, the other questions come and move this question, guys. Sorry, bear with me for a minute. Okay, hi Silvana, I just wanted to clarify the transferring the investment property to the child to the lower price, then the market value, then the parents are still alive. Can it be the principal residence, the resident for the child? I think you don't understand what is principal residence is for this particular person. Okay, the question again saying, hi Silvana, I just wanted to clarify the transferring the investment property to the child at the lower price. After transferring the property at the lower price, there are some issues. I tell you what. After transferring the property, the child name, the child is going to be the owner of the property. Okay. Then the market value. Then the parents are still alive. Can it be a principal resident for the child? Okay, I think when the property is transferred to the child name, if the investment property, doesn't matter what the usage for before, after the transfer the property to the child name, that what the child is going to do, is she going to move in the property and live there on the property? Then it's become as a investment property. And if she going to rent it out, again it's going as an investment property. But at the same time, transferring, you cannot transfer it for $2. Only Canada and the probate courts and everybody smarter than us. Okay, for example, when you're transferring it's not okay. Sorry, it's not the question is not for the probate side, it's the regular transfer. Okay, what's the court saying? Transferring be reasonable price. They have to transfer the property. The market value, you have to transfer the property. I seen some people say transferring the property, especially the investment property. If you are transferring to $2, that's going to be a major issue for the Revenue Canada issue can come. For example, father bought a property for 500,000 and the property value for 1.5 million. He transferred to the daughter to a 200,000. Government of Canada can easily come and ask file a case for this one. We don't transfer to the market value. We had to go to the market value for the transfers. And the next part of the question is principal residence side. Principal residence side, you can have only one house as a principal resident. Even though you are living in two places, you have a cottages, and no, you are not renting out. You are the only person go there and leave the cottages for the winter months. Winter months you go and live there and come back. Even that only one property, where you file the tax, where you showing the Election Canada, which property you are using for the Election Canada as an election site and everything. That's a property going to be a personal property. Other property is a secondary property. We had to pay for the capital gain tax. Yes, this question that after transferring the property, child moving the property, previously investment property, it doesn't matter. Once you transfer the property, it's going to be a but the usage, the daughter is doing it, the child is doing it. Okay, based on that one, it's going to be under the tax part. I seen many cases, guys. Please tell your agents too and yourself. Transferring the property low value. What are the worst mistake you can do? What are the worst mistake I could say? The reason you're going to gain only 1.5%, 2% land transfer tax for the transferring. Some lawyers transfer it. Believe me or not, I'm not making up the stories, guys. I seen some capital gain part recently. I seen one of the property that lawyer transferred to $2, and now the property is worth 1.8 million. They're going to pay for the tax for the whole 1.8 million because the reason lawyer was saving the time to transfer the property to the family member, saving the land transfer tax. Lawyer doesn't know the accounting side. Worst mistake for the capital gain part for those kind of things. Unless otherwise you live there. That's also what you had to, when you apply for the permanent residency, you had to have the certification. I think I forgot the form number for the CRA filing category form numbers. I just forget. We had to file for those forms. The property, you don't buy it and you get the transfer of the property and you're selling it back as a principal resident. We had to disclose the forms. And other question is here right now. We sold a property for the firm offer. After that, they didn't close the transaction. Do we have to pay for the deposit check back? Okay. We closed the property, not here, buyer side or seller side. Okay. We sold out the property for firm offer. I think he's asking the seller side. We sold the property for the firm. After that, didn't close the transaction. Do we have to pay for the deposit check back? No reason. Okay, here the question is the seller. I assume this question from the seller side. After close the transaction, the buyer didn't close the deal. You are not giving the deposit check back, but still the seller can sue them for the damages. Seller can sue them for the damages. There are two categories here. One, the transaction doesn't close. One, suing for the deposit, suing for the damage. There are two kind of lawsuit you can go. Suing for the deposit, very basic. When you apply, you don't even need to see the judge. The mediation officers immediately sign off for the suing for the deposit side, because whatever the deposit going with the offer is a good faith deposit. That's money go to the seller. 99% chances. And the next one is the suing for the damages. There is no reason you give back the deposit to the buyer. Okay. Okay, that's all the questions are in the chat box. Now I have 30 good minutes. I'm going to go for a Canada pension plan. What are the benefits you're going to get in Canada for the Canada pension plan? Older security and old age security and the old age security supplement. Okay, first we will go to Canada Pension Plan side. When you go to Canada Pension Plan side, Canada Pension Plans works everybody based on the contribution. Canada Pension Plan, they are not giving any extra money. Whatever the money you contributed, that money you're going to get it. The calculation, anybody can get the calculation. You had access to the open up the My Account with the Service Canada. Once you open up the My Account with Service Canada, and under your social insurance number, you can see what are the age you're going to retire and how much you can get it. But at the same time, when it's come to the Canada pension, basically how much pension you are contributing, that's based on the income. Even though based on the income for the Canada pension, today is the Canada pension, the maximum Canada pension one Canadian can get 1,000 based on yesterday's information, $1,253.59 per month. The maximum Canada pension you can get per month, $1,253.59. That when you reach 65 years of age, that's based on the critical calculation. You have to contribute in Canada pension 40 years of time, because they're looking for the 40 years period, plus the salary range. How many years of 40 years you are paying the pension? The pension limit start from $3,500 and up. Anybody's make the money as a student, when they make less than $3,500, you don't pay the Canada pension, even though you pay stuff. If they take the Canada pension, they will refund you back. Okay, that's one of the things. Second thing, the paying the Canada pension 40 years, how much the ceiling you are in the Canada pension. For example, one person is making for today's standard 2021. We checked 2021 as an example. One person is making only 40,000. Other person is 60,000. Other person is 200,000. When it comes to the Canada pension, they have the pension ceiling. The pension ceiling for 2021, 61,600. If anybody make more than 61,600, their pension contribution is limit. Pension's contribution is stopped by 61,600. They don't charge after that one. You can see it sometimes. The higher income makers, people, the pay stuff. When it's come after the October, sometime November, December, October, if the salary reach over 61,600, they get better money in the netting of the better money they had, because they don't need to contribute the Canada pension plan. Okay, the same thing, 56,000 for the EI. They don't need to contribute. That's the ceiling is there. Okay, when we get back the pension, it's going to be, are you maximizing the pension limit for last 8 years? If I am right, after last 8 years, are you maximizing the pension limit? That's one of the things they are looking for it. If somebody's income is lower and somebody's income is higher, even though higher person income doesn't matter. They are the higher income for the Canada pension purpose only $61,600 for year 2021. Okay, that's changed every year. That slightly change every year, and they are looking for the 40 years contribution, and the Canada pension. After, you can apply for the Canada pension from age of 60. Age 60, you can apply for the Canada pension. And clients ask this question: age 60, you can apply for the Canada pension. When you apply for the Canada pension, age 60, and you get the portion of the pension. You don't get the full pension. And even though you get the age 60 pension, start the pension, and you can still contribute the Canada pension until the age of 65. And up to, you can even contribute at the age of 70. Under the age of 70, immigrants who come late, only we came to Canada before example. Somebody came to Canada only when they are in the age of 40, 45 or 50 years. He can pay the Canada pension up to age 70 to increase the pension limit until he lived here. Or else, after 65, if they are working, he can send a waiver form. He can send the waiver form to CRA not to take the pension. In that case, CRA can stop from age 65. Before age 65, they don't have a right to stop the pension contribution. But you can collect the pension from age 60. And if you are working, you have to pay, you can contribute up to age 65 for the pension. When you start to contribute after collecting the pension age 60, if you're still contributing the age up to age 65, yes, your pension limit can go up, go slightly higher. Those calculations are very clearly marked under my account for the Service Canada. Canada pension is very straightforward. And the next thing is Canada pension. If you pay the pension minimum 10 years, and even though move to the different countries, the age comes after 60 years or 65 years age. If you are, even though the person Canadian living in the different country, they can apply the Canada pension. Yes, he can, even though he doesn't live in Canada, not in the Canadian soil, he is still eligible for the Canada pension. The reason, whatever the money he paid, he's going to get back. That's out of country, they can get it. And then the next one is old age security side. Old age security is interesting one. Old age security is interesting one. Old age security, there is a the limit is there. Old age security. Okay, I'm going to go through that one. Old age security pension. Yes, old age security pension now. The highest limit, some old age security pension, somebody can get the maximum monthly payment under the program, $948.82. $948.82. The old age security pension, somebody can get it if they live in Canada. If they live in Canada for the 20 years or more. Now, old age security standard, they are looking for 20 years term. If they live in Canada for 20 years or more, they can get in the old age security side. But old age security senior pension, just give me 1 minute. Okay, in order to get the old age security, you have to live in Canada minimum. In order to get the old age security, you have to live in Canada minimum 10 years. Minimum 10 years. If somebody live there, they started the old age security pension, especially for the non-working spouse category. Canada pension, spouse working there and he pay the pension. In case non-working spouse, she or he at home and look after the kids and everything. When they reach a certain age, if they go for a divorce or anything happen, that particular partner in the family, they don't have a Canada pension contribution because they work. But they work more than the regular working person. The working at home is more than regular job. In that case, government introduced a program to protect everybody when they get seniors. They want to protect everybody when they get old age to get almost the equal amount of the money. That's the way they started the old age security pension, pension plan. Old age security pension plan, you must be live in Canada for 10 years, minimum of 10 years. That's the reason our immigrants who come to Canada, not even pay any contribution and everything, after 10 years they are applying, because 10 years if you live in the Canadian soil, you are eligible to apply for the old age security pension. And old age security pension, the maximum pension, as I said, you can receive $948 if you contribute the full period. And old age security pension there's a clawback. We call the clawback for old age security pension. If your income is higher, you are not eligible for that one. For example, I have a chart right now for the income limit for every year change. The 2021 income limit. For example, you are getting the Canada pension, doesn't affect any income. But you are getting maybe you are renting out and getting the investment income, you have a dividends, you have a company pension, or so many other things can come. If you are getting if you have a person is wealthy, your income under the tax part, your taxable income under the line 235, the taxable income is for 2022 $79,845. If anybody income is investment income, rental income, dividends income, company's income, or withdrawing the RRSP from the own RRSP, they withdrawing the money. Withdrawing the RRSP, anything is over 79,845. What they had to do, they had to pay back the old age security pension, because old age security pension you didn't contribute. Government give you because to help you out. In this case, what you had to do, the calculation is an automatic calculation when you do the tax returns. You are paying back through your income tax return. They don't send you the bill to pay back. The income, the government of Canada, they're collecting this money, old age security, overpayment, the clawback, the right word again, the pension recovery tax. That's called pension recovery tax. The pension recovery tax, when you file the income tax, your net income is more than 79,845 for 2021. The way it's work, what are the difference? What are the difference is more than, for example, the calculation, Canada's calculations here, the particular person's income is, they mark the calculation based on 2020, guys. 2020 limit is 79,054. If the person income is 93,000, for example, the 93 minus 79,000 is coming up to 13,946. 15% of the money you're paying back through the income tax. That's called old age security tax credit. Because not tax credit, old age recovery tax. We are paying back through the tax return to the government, old age security. But the Liberal government bring the law 2 years ago. I believe it's 2019 December. They bring the law. If somebody the old age security, you have to live in Canada to get the old age security. But even though you don't live in Canada, if you are living 20 years, if you complete 20 years, 10 years minimum to qualify. If you already contributed continuously 20 years, even though you go back to different country, based on your reporting income, you are still eligible for the old age security pension, even though you live in Canada. That's a new law came out from the Liberal government. And other one is interesting one, old age security supplement part. Supplement part is everybody need to know about the supplement part. Supplement means is old age security supplement. What happening? Mostly our new immigrants who came from different countries, they don't have a Canada pension. They after 10 years period, they applying it, getting it. Their old age security pension is going to be lower, the limit. But what the government is giving, if somebody coming age of 65, mostly the welfare system is in Canada and some of the major developed countries, we have the welfare system. Welfare system developed, the person not going to die for the poverty. Without food, nobody want to die. That's the reason the welfare started. But after 65 years of age, the government doesn't want to call as a welfare. And plus the provincial government and the federal government having some agreement, who is the one going to pay for the money for the welfare amount. Welfare amount mostly come for the regular people's provincial government. Ontario, especially Ontario. I don't know about all the provinces. I know about Ontario. The people who apply for the welfare is coming from the Ontario government because they are living in the Ontario. You have to live in Ontario. Then only Ontario pay the money. Live in Ontario and you are spending the money back. Whatever the money you are getting, you are spending back to Ontario. That's rotating the economy again. Okay, the provincial government paying. When somebody reach age of 65, maybe they didn't have a Canada pension, they didn't work properly, they didn't have a Canada pension much. I'm talking about not only about the new immigrants, regular people, even Canadian. They didn't work much, they don't have much Canada pension to get, and the old age security is not enough for them. After 65 years of age, their income is not to support the standard of living. In that case, what happening? The government review every year the standard of living ratio and increase the old age security supplement for the people over 65. The money getting it over 65 years of age responsible by the federal government. The federal government directly paying for the seniors over 65 years of age. That is money getting from the federal government. The regular welfare by the provincial government. Okay. If the government want to give the money for the supplement money. This is the reason your clients may ask you about RRSP. If I have the RRSP, I don't get the pension. If I have the RRSP, I don't get the supplement. I need to withdraw the RRSP before age of 65. I have a rental income. If I have rental income, how is going to affect my rental income? Going to affect my old age security pensions and supplement and the different country pension, teachers, police force pension side. Okay, what this basically is, again, old age security supplement, you have to apply for it. If you don't apply, you don't get it. If you think you are rich, you don't need to apply. If you don't apply, you are not going to get it. That's one side. When everybody, most of the time, when they apply, everything goes as a one package, old age security and supplement, depends on the person who applied. After they applied, what they do, Government of Canada, they're looking for the tax return. how much money you are reporting as a taxable income. Based on the tax return, based on the tax return, for example, in the income tax side, tax year is different than the benefit year. For example, take 2021. 2021 tax year, 2021 is tax year is January 1st to December 31st. Based on the 2021 benefit year, start from 2022 July. That means after you file the income tax in 2021 income tax before April deadline, self-employed June 15th deadline. After that one, from July 2022 July to 2023 June. That's the way the tax year start. Immediately after the next year. Benefit years always July to June, because they want to know how much tax you file, where is your tax return is. You must file a tax return in order to get all the benefits. That's one side. Okay. Here, after the Canada pension and the old age security pension, after they file the tax return, Government of Canada will look at it, how much money you need it. The ceiling is there for the old age security ceiling for 2021 old age security ceiling for a single person, whether marriage status is single, separated, divorce, any categories, status is $19,248. If anyone income is the lower limit is $19,248. If anybody's income is more than $19,248, they are not going to get more than $19,248. The old age security supplement based on that one go less. If the person is married, if the person who's going to get the old age security supplement is married, they are looking for the marriage spousal, both husband and wife income, because the benefit always count for the family income. Family is not for the kids, only husband and wife. They are considering as a family side. Their income is $46,128. If somebody's income, individual income, go for individual income, $19,248. If anybody's income is more than $19,248, their old age security supplement, definitely they start to go down, because that's a federal welfare. If we have a money yourself, why you want to get the welfare? Government argument is perfectly right. In this case, what happened? If that's the reason some people say, I don't want to have an RRSP. If I have an RRSP, I'm not going to get the pension. That's a wrong concept. For example, if you have an RRSP, first of all, you can contribute the RRSP up to the age of 70, 71. There's a grace time. Is there age 70 or 71? There is some argument. Say age 70 is a safer side to say. You can contribute the RRSP up to age 70. You don't need, nobody going to tell you to withdraw. RRSP, registered retirement saving plan. That doesn't mean RRSP only you must withdraw from age 65. No. Registered retirement saving plan, they're based on your retirement plan. Okay. After 70 years of age, what happened? Government of Canada doesn't want to keep the RRSP as it is. You can contribute the RRSP only up to age 70. After age 70, RRSP automatically transferred to RIF, Retirement Income Fund. What happened? That's a government policy. As for my knowledge, it's 7% of the money, whatever you have. For example, your RRSP limit is $100,000. You have it in the bank. Very first year, when you turn into 71 years of age, 7% of the RRSP, you must withdraw it. They will send the money to your house. they can't keep it. That's you must withdraw that one. That's the thing. Sometimes people confuse and think, if you have an RRSP, I'm not going to get the pension. Very wrong thing. Your Canada pension doesn't affect. Your old age security pension doesn't affect if you have an RRSP. It's become as an RIF, Retirement Income Fund. But old age security supplement, that's a government welfare. Why you want to go for welfare then? I always advise my clients come and ask, do I need to withdraw the RRSP before age 65? It's a wrong idea. Why you want to depend on your government? You work all these years. Why you want to depend on the government after 70 years of age? Keep your own money to live. Okay. In this case, please advise the clients. There are so many misunderstandings with the RRSP side. RRSP, if we start with the RRSP, you're going to live with your own money. If not that one, yes, that's only the RRSP supplement part is going to be considered for the old age security supplement part. Second thing, some people think rental income. Rental income, if I own the house, if I have the money in the bank, do I affect for the pension or old age security pension, or Canada pension or supplement? As from my knowledge, again, I want to disclose the statement very clearly. As from my knowledge, doesn't affect. Only what are the income you are reporting it is affect. Second thing, if somebody have a rental income, the different department count the rental income. Some of the department look at for the net rental income. Some of them even take the gross rental income and put 50%. In that case, different provinces looking for different ways. If the gross rental income and looking for the 50% of the gross rental income, for example, there are some cases they look for that one. Some cases they go for the net rental income. Is a public, over 120 people are listening, then I don't want to disclose anything for this part. Check with the province, which province, and check with the accountants who are dealing with, and how they're going to file the taxes. When are they going to show the net rental income, or they're going to use a capital gain and write it off the net rental income? There are so many factors is involved for this situation. This is for Canada pension plan, old age security, and old age security tax credit, not tax credit, sorry, recovery tax. You had to pay back the old age security and the old age security supplement. If you have any questions, please ask me right now. Otherwise, I will go to some of the questions I have in the this week calls. Anyone have any questions for this? Or Canada pension, old age security tax credit, payback, clawback, or supplement? Okay, if you don't have the question, I have a good 10 minutes. I have a good 10 minutes. We can talk about it. There's a question. I got this question for last week. I suppose I answered this question last week. I couldn't get the time last week. Okay. Can I able to sell my investment property? Sorry. Can I able to sell the investment property? I bought it from the builder in 3 months' time. Do I need to keep, or do I need to keep for 1 year to show as an investment? Okay, for example, this is really a very good question. I want to repeat again. This question saying, I bought it from the builder. When I bought it from the builder, I told the builder I'm buying it for the investment purpose. I'm buying it. I bought it after I bought the property for the investment purpose. How do I need to keep it for 1 year to qualify for the capital gain as an investment, or else I can sell it in 3 months' time? It's a really good question. For example, the question is mean whether the capital gain or inventory category. For example, this question, he bought it from the builder. That means if you buy it from the builder, you buy it for the pre-construction. The time you buy, you're disclosing you're buying for the investment purpose. Very clean. In this case, as for my knowledge, guys, again, as for my knowledge, you are already disclosing the builder you're buying for the investment. As a pre-construction, you already paid the money to the builder and you're waiting. I don't know how much time you already waited. Your capital was sitting there with the builder. I don't know how much time. Then you close a transaction. Once you close a transaction, you can sell it. 3 months' time, yes, you can sell it in 3 months' time. Only way Revenue Canada look at it for this question is based on how long I want to keep the investment property to get the capital gain taxes. The 1 year, everybody is our own mind. They all talking each other and say minimum we have to keep it 1 year, then only the capital gain part. No, tax law doesn't say 1 year. Tax law saying you have to prove there's a reasonable time limit you are keeping this investment. That's the way the tax law is saying that one. Second thing, there's a difference between inventory and the capital investment. For example, you are buying the property, and you are renovating the property and flipping the property to selling somebody else. Again, you are buying the property. Okay, you don't rent the property, and you are buying the property and you are doing the renovation and you are selling the property. It's almost same like the furniture store. He getting the furniture from China and selling to somebody else, or else grocery store getting the rice bag from Vietnam and selling to somebody else. Same thing, you buying the house, renovating and selling to somebody else. This cannot come under the capital product. This is not a capital gain. This is a business product. It's a business inventory. The part of the profit you make, you have to pay for the 100%. Okay, that doesn't matter even though you keep 1 year, because the reason you don't rent it out. Your renovation takes 1 year, doesn't matter. But CRA is very fair. CRA is very fair department. They will look at if it is only one house you did, first time, they can give you some leniency. And if it is continue the basis, if you are doing as a passion, yearly you are flipping 2-3 properties, yes, that's going to be inventory. That's going to be inventory, you have to pay for the full tax. That's not capital gain. In this question, buy it from the investment, buy it from the builder as an investment property, even though you can sell it. But the only thing here, when you buy it from the investment property, you have to pay the HST, 24,000 HST. Say, assume the property price is more than 450, you have to pay the HST. But you cannot get back the HST refund. You are not eligible for the HST rebate. HST rebate, you are not eligible. HST rebate, owner occupying property, you can get the rebate. Rental property, you can get the rebate. Investment property, you are investment you're selling right away. No, you are not getting the rebate. That's going to be the cost of the property. Okay, and we have 2 questions in the chat box. He asking, hi Silvana, is it a good idea to contribute CPP after age 65 while collecting CPP? My answer is depends on your financial planning. For example, if you are a self-employed person and you are reporting the self-employed tax, your net income is over $60,000. Guys, it's a good question, guys. One agent is asking me, hi Silvana, is it a good idea to contribute to CPP after age 65 and under 70 years while collecting CPP? The answer is what category you are right now. For example, if you are a self-employed person, we are in the group of real estate agents are self-employed people. If you are a self-employed person, you want to pay the CPP. That's means you are paying 2 CPP. The CPP you are paying from yourself. You are paying the CPP for under the category of your own CPP as an employer CPP because you are a self-employed person. Without checking the computer over my head, around $6,000. I think $6,200. I checked yesterday for somebody. Around $6,200. Reporting the income again. Reporting income. Reporting net income. Reporting net income under the self-employment category. Over 61,200. You had to pay for the Canada pension plan through your tax return $6,200 plus. In this case, if you ask me, can I pay $6,200 every year to 5 years? For example, is 6,200 into 5 years, around $31,000 to Canada pension plan, and getting another $50 back, $50 more after 70 years, I would say no. But if you are working one place, one employer portion he is paying them, I would say no for this one again. The person who was sending it, because the return is going to be very less. Return is going to be very less for the Canada pension plan. Even though you are working place, you may end up pay around each year $3,000 Canada pension plan from your income. You have to pay yourself Canada pension plan from your income, and plus self-employed. Definitely, I would say no. If you are reporting self-employment through your personal income tax, nowadays you have a PREC corporation. If you have the PREC corporation, you are collecting the dividends. You don't pay Canada pension. That's other story. If you are collecting the money from the PREC corporation, when you file the tax return, you are going to report the dividends income. That's one of the advantage for the PREC corporation. You don't pay for the $6,200. You can save Canada pension plan. We are reporting over $60,000 dividends income. Canada pension plan alone you can save. I think I have a feeling. It's my own thoughts. You do it yourself rather than paying to the pension department another 5 years, $30,000. The return is going to be very less. The next question: if I sell within 3 months, then have to return HST back to the government. the person who asking me, if I sell, he asked you the previous question. If I sell within 3 months, have to pay the return back to HSE. You don't get the return to pay back the return. Krishna, the question is, you are buying the investment property. When you buy the investment property, you are disclosing to the lawyers you are buying the investment property. You are not getting the HSE rebate in your hand when you are buying it. The only thing you are getting the HSE rebate, they're directing the builder is directing the HSE rebate if you are buying for the owner occupying property. If you are buying for the rental property, you have to pay the HST and apply it and get back. If you are buying for the investment property, you are paying the HST. Your question saying if we sell the property in 3 months' time, have to pay the HST back. You are not getting the HST rebate upfront. In that case, nothing to pay back. Okay. The next question, HST for rental property subject to CRA, October 25th, 2021. Refund not received. How long is take HST refund? Should we call CRA? Yes, this is the reason. How did you file? Okay, the question. If you can't come out and you can't come and talk to me, the voice. How did you file the HST rebate back? You paid the HST upfront, or you said, yeah, I'm going to live there, and you're switching it. That's one of the situation. If you already paid the HST, according to the chat box, October month. Now December, January, February, only 5 months. Yes, it's happening some people. But if you already pay the HST upfront, the time you buy the property as a rental property, and you are sending the application, when you send the application, the person who filed the HST is supposed to know the regulations, how to fill out the application, and what is there are some of the hidden points is here. One, who you rent it out. The builder is renting out to the rental guarantee category. Builder is renting out, or you are renting out yourself. Number one. Second thing, did you pay the HST upfront, or you said I want to live there and after that switching the application? The third part, the rental application. The rental application, how many months the rental? Minimum 12 months, minimum 1 year rental. If anything is less than 1 year, you are not qualifying. I want to know those answers. Most of the time, HST rebate, people are getting back HST rebate 6 to 8 weeks. 6 to 8 weeks is the time. Mostly they get 68 weeks. Okay, if you don't, okay, the question is answer is coming up. 1 year rental agreement. And did you pay the taxes and asking back, or you are switching the application? You are getting did you pay the HST upfront, or you are switching the application? Oh, in that case, he said he already paid HST upfront. October 25th, he filed the HST. Just you call HR, call CRA. Don't wait 8 weeks. 8 weeks time usually get back. At least you call and talk to the person who's doing the HST, and they will tell you they'll give you the information. Most of the time during the pandemic, some people are working from home, and the person who assigned maybe can delay. That's happening some people, but at the same time, if it's a straight regular application, I even got some clients got back in 3 weeks time for the HST. You can call and ask. Turnaround time is 8 weeks in my opinion. 6 to 8 weeks is enough. If you don't get it, there are some issues. Just call them right away. All right, there are. Okay, for the supplement, if the spouse have income, is it the qualification based on combined family income? Yes, the combined family income is the one. Dishita asking the question for old age security supplement, based on the income level. Yes, the old age security supplement coming under the benefit category. Getting the benefit is a family income. There are so many things from the benefit: GST, Ontario property tax credit, everything under child tax credit. They all calculate for the benefit category. Same thing. Old age supplement also under the benefit category. The family income, they're looking for the family income is 48,000. 46,128. They're looking for the family, the combined income for the old age supplement. Okay. Okay, that's it for today, guys. Today's you're almost finishing now, and see you guys next week. If you have any question, come out and ask me. Otherwise, we can meet next week. Okay. I was doing the classes for Friday classes for last 3 weeks. Whoever came to the class last 3 weeks, Rafael Selvakumar was away on vacation. I was doing the classes. Many of you came to the training for the Friday training. Yesterday also you guys came. Starting next week, he's back and he's going to do the MLS training as well as one-in-one training for the training center. Please come out. Don't stay in the Zoom only. Please come out and start for the training center with Ravi Selvakumar. If you guys ready to come out, I can have Zoom as well as in class in the future. We'll think about that one. Okay. Thank you very much. Have a great weekend, guys. See you next Saturday morning.
Thank you.